Live Trading Talk Market Wrap for February 28, 2022. Let's take a look at the headlines here for Google. And what we have basically is a lot of information about Russia. Most of the headlines are pretty much regarding the Russian invasion. Ukrainian military says dozens of civilians killed in Kharkiv. Why is Russia invading Ukraine, and what does Putin want? So we have this tremendous new black swan, you might say, that has come into the market that we have to deal with, and the market is trying to make some sense in terms of how to recalibrate to the situation, as the Russian crisis basically has put in a tremendous amount of pressure for the supply availability of grains, in particular, coming out of the region. So we have seen a tremendous rally in soybeans, which is one of the major leading indicators of food and inflation, food prices, as a consequence of basically the sanctions that are being implemented against Russia that will not allow for any trade to be done in grains. So therefore, the demand for grains is going to have to shift to the U.S. Or to South America, which is making U.S. grains pretty much at a premium. In addition to the fundamental factor that we have in the U.S., which we are running very, very historic drought, it's putting a lot of pressure in prices here with regards to basic foods like soybean meal, corn, wheat, and the derivatives like the crush of soybean oil and soybean meal oil. The reason why I'm talking about this is because I believe that we are starting to see a lot of pressure put in food prices. And I think that this Russia situation is going to make things worse, basically, for the availability of food prices. So I am looking for the possibility that we may run into a shortage of foods, shortage of commodities from that region. Not to mention the amount of demand that is coming out of this new economy that we're building up, so to speak, or trying to adjust to. The demand is unprecedented. And so we have the competition now, basically, of Western demand coming into the market for basic goods, commodities like crude oil, for example. The situation in in Russia is affecting the supplies of basically crude oil to the region, natural gas, as Russia is one of the major suppliers and beneficiaries of a rising price of crude oil. So this is bringing in a new element into the commodities markets, into the precious metals markets, which were not accounted for, so to speak, previously. And we pretty much are putting a lot of pressure in the supply and demand balance as we move forward here into the next few weeks here, next few months, depending upon how this Russian situation resolves itself. We're going to see basically a disruption in supply and possibly a disruption in transportation as a consequence of the high risks that we are running right now in that region. So let's take a look at the market here, for example, in just to review soybeans. We're looking at a high that was made here last week of 1759. This was a record high, and this was a move that we saw from about $12 a bushel, just going back to November 9th of 2021. And the price of soybeans has almost doubled here by reaching 1759 and a high here last week. We've seen a little bit of a correction here and reverted right back up here today. That appears basically to still have a lot of buying interest in the market, with the potential of breaking out of this retracement or this target here of 1759. 1759 a bushel. What I want to do is take a look and see what the reversion could look like. If we break out of 1759, then we're looking at about 2120 on soybeans, which is beans in the teens. This could be a year where you see the beans trade in the teens. If we do get a squeeze, a short squeeze in this market, and there's no available supplies. One of the things that you want to take a look at is the fact that the price of the delivery for March contract is trading higher than the back months. We have an inversion for the deliveries of March, May, July against the back months of October, December, and March of 23. The market is completely inverted, which means that there's the potential for shortage of supplies. This is what I'm pointing out here. It's extremely important because this could just skyrocket to $20, $21 a bushel in no time if we get a squeeze on the short side of the market because of the lack of supply. So the inversion that we're looking at in price is beginning to tell us potentially that that is a possibility, and the market is given a sign basically by looking at the inversion in price that we're looking at. We're looking at soybeans trading at 1638 for May as the March goes off the board, 1620, 1577, all the way down to November 1439. We have a huge inversion of about 70, 80 cents between the front month for delivery, or the May for delivery, against the November, which is the new crop. So this is a warning that this markets potentially could experience a short squeeze, a shortage of supply. A shortage of food is basically what we're talking about. Soy meal, the front month is going off at 456 and a half. The back months are trading at 404. You got about a $40, $44 premium on the front months. Remember what happened to gold in March of 2020 when the premium went about $100 in the spot market because they couldn't find gold, physical gold. The mines were shut down. Well, guess what? The fields are going to be shut down again because of this war. Supplies are going to get pretty short. Not only are we going to experience an additional squeeze in the supply chain, but the inventories that we had on hand available, which were reduced in anticipation of potentially the pandemic causing damage, in effect turned out to be the reverse, where the demand is historic against a shortage of supplies, against a potential decline in inventories. I think it's the perfect combination for potentially hyperinflation in food prices. Crude oil traded $100 a barrel. $100.54 a barrel was just traded on Friday. This is not positive for consumers. This is like a huge tax on consumers. So let's take a look and see how we are positioned here. Myself, our traders, what we're looking to do here moving forward as we take a look at the precious metals, gold and silver, as well as Bitcoin. The gold market came in today and opened at about 1921 with a high of 1935. It came right into a 61.8% Fibonacci retracement and completed the pattern of 1915 that was recommended by our robo-advisor. And so we're looking at basically a completion of this move that we saw earlier from the daily average of 1899 as well as the weekly average of 1915. We came in and made a completion of a target here as we came in this morning. And this is a sign basically to go neutral. And the market, if you take a look at the video that I did this morning here, we pretty much stayed in the neutral zone. When the market is trading around the daily and average price, it's pretty much trading around the 50-50 standard deviation. So we want to wait until the highest probability, and that is either the market coming down into that buy one level of the extreme below the mean, or going up into the sell two level of 1940 once again, or coming back down to 1875. So we maintained a neutral position in gold. Let's take a look at silver. The same thing. We completed the target at about 6:15, 6:30 a.m. of 2461 and actually reverted right back down into the daily target of 2471. And trading between the weekly average and the daily average. Coming back down to the daily average, it activated a daily bullish price momentum. The target above, again, is activated at 2461. If we get a close above 2461, then obviously the market is looking to test that upper level of 2490 or 25 once again. But once the weekly and the daily are trading in between the zone, that means basically it's a neutral zone. Let's take a look at Bitcoin. What we saw here was the market come down to test the weekly average price of 37,693. As you can see here, it did not make a lower low, even activating the buy two daily. It found support at the buy one level at about 11:15 p.m. on the 27th, came back down and tested again, and roughly at about 5:45 a.m., it reverted from that level, unfolding the bullish signal, activating the targets above, completing 38,855, and the levels above sell 1 and sell 2. Weekly and daily. So we are trading now above the daily and the weekly levels, and the sell 2 level that has been activated is the 43,173. We are in an overbought area, in an overbought condition. And the algorithm tells us to prepare that the higher it goes into that sell 2 level, the higher the probability that we're going to find sellers or supply come into the market. So be aware of that and continue to use the weekly numbers for the rest of the week. And basically, we will see the data come out here after 3 o'clock Pacific Standard Time for tomorrow's trading, which, if you have access to our private trading room, you will be able to get access to this information. Have a good night, everybody. Until next time, my friends, be well. Take care, and I'll talk to you soon.